But if you return to sound money, you can keep your family together and make them stronger as the rest of society tears apart. But even it can only go so far until the whole system stops, and then families have no choice but to care for each other because things are desperate, and then that repairs a lot of the damage. It doesn't repair all of it, but it repairs enough that you can start the next generation on a better footing than these generations were.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2025, while supplies last. First this week, we feature 1-ounce silver Canadian maples at their lowest premium in years at just $3.49 over spot. Next, 1-ounce Gold Philharmonics are only $65 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. This is your host, Dunnigan Kaiser, the founder of Liberty and Finance, and I'm pleased to welcome back a returning guest who has his own Substack channel. Rafi Farber, founder of The Endgame Investor, joins us this Tuesday, April 29th, 2025. Rafi, thank you for coming back on Liberty and Finance.
Thanks, Dunnigan. Good to see you again. It's been a while.
You have a wide following and a very highly respected reputation among our subscribers and viewers. I've observed, and I mentioned this to you before, but it still rings true, after each interview, the quality of the commentary that we see in the stream of comments is generally quite respectful and validating of the value that you bring to the discussion through your seasoned and reasoned analysis of what's going on, trying to take a common man, but reasonable, based in facts and reasons, look at what's going on and kind of strip back the veil of the mystery in front of our financial and monetary edifice. So thank you for being here. And we wanted to follow up with you on two things that have already been in the news and one that you brought up a while ago. So today we're going to try to hit in rapid succession some surprising dynamics you're seeing on the exchanges about open interest in gold versus the price that it's at. Also, what's been underpinning, in your view, the sustained backdrop of high demand for gold over the last couple of quarters, and whether you see that persisting and going forward. And also something more on the philosophical side of psychological and moral truth, and that is that when you get debasement of the currency, you get debasement of a lot of other things in society, and it has a toxic effects on many aspects, and we're going to touch on those briefly. But let's return first to the first topic, and that's what you're observing about the open interest of gold versus its price action on the major exchanges, and what you believe that reveals about what's been happening and what may happen next.
Yeah, so open interest is one of the main metrics that I follow. It shows how many people have bets open either on the long side or short side. They always equal each other out because every long is a short. How many of those contracts are open? So how much notional value of gold is being traded at any one time? And the lowest that we've gotten post 2008 itself, the dip of that crisis, I think it went down into 300,000s and maybe in the high 200,000s, if I remember correctly. I don't remember exactly. But the lowest that we've gotten since then has been about 400,000. And we're just above that now at about 450, 460, something like that. And that's a very low number. And before this rally, you could say it started in January, February. If you look at the interplay between price and open interest, usually they go up together and down together, and then open interest resets, and then you start another rally. It's like, a ratchet. So the price keeps going up, but as it goes up, open interest goes up, and then open interest goes down again, and the gold price goes down a little bit, but then ratchets up again to go higher. It's that sort of movement. And so when we see something like open interest falling, 100,000 contracts, 150,000 contracts. I don't know exactly how much it's fallen since January. It's something around there. But the price going higher anyway. That means that the shorts are closing their contracts. They're buying back their short positions either with dollars or with deliveries. Right? They can close their contracts by delivering gold, and their dollar positions don't really change. So that's what the bullion banks do. So that's how they hedge, right? So if they're short a contract, doesn't mean they're shorting gold outright. It means they're shorting the futures, and then they bought the physical somewhere. And I think that's where the deliveries come in, right? It's the bullion banks that are delivering gold into their short positions so that it doesn't really affect their accounting. They can do that as long as there's enough gold to do it, and so far there is. So I think the fact that open interest is so low, and a lot of it is down because of these deliveries. Every time a contract is delivered, that open interest is erased, right? And that means that the amount of speculation in gold futures now, not for delivery, but just to speculate on the price, is very low. Otherwise, open interest would be higher. And because it's so low, that means that there's room for it to move higher, because the speculators that drive price on the margins are not in the market right now. They're gone. I think they were in a little bit when we hit 3,500, but even then, open interest was still pretty low. I mean, we can get as high as 600, 650,000 before it really gets into the nosebleed section. The highest we ever gotten was right before the 2020 COVID crisis. I think around January, February 2020, it was like 850,000. That's abnormal, but a high number would be around 600,000. We're nowhere near that. There's plenty of room to run in the rally.
Is it fair to say that the open interest in this case can appear as a leading indicator, somewhat correlated with the potential setup for a upward movement in the price once the open interest hits a low and starts to turn around?
Yeah, so there's a chart that I use. I show a lot on Gold Charts R Us. It's a service that I use a lot, and I recommend it. I'm not affiliated with him, but it's really good if you want to track these things. I think it's Nick Laird owns it. And what I do is I show the bars of open interest in accordance with the price in the top, and I draw a rectangle, so you can see that every time there's a local low in open interest, that usually correlates with a local low in the price. Not every time, but it's pretty reliable. So then I would say, for that reason, that if there's going to be a further sell-off in gold, it will either be shallow in price, meaning it won't go much lower than it is now, or, I mean, you could have a very brief blip. I don't know, I'm just saying a number just to pick a number, 3,000 or whatever, which used to be, a big high watermark a few weeks ago, and now it's like, oh my God, 3,000, gold's crashing. So, everything's changing so fast now, and our mortality can't keep up with the reality. Yeah. So that could happen, but if it does happen, that would be the bottom, and then we'd be on our way up. So either short in any continued correction for would be short in time, or shallow in price. That's what I would speculate.
Now, along the way, you were mentioning that some of these open interest can be covered by actually satisfying contracts with physical gold. Does that do anything to counter what we've been talking about, and you have been for some months and months, which is this drawdown of physical gold available for delivery on the major exchanges?
I don't know if delivery has anything directly to do with the amount of gold on the exchange. You'd have to actually take it out, because delivery, I mean, I've done delivery before. I've gotten physical delivery, but the word is kind of false. It's not physical delivery. It's sort of physical delivery in the sense that you have, instead of the notional right to, let's say, 100 ounces of gold in the ether, you have a right to one specific 100-ounce bar, which they could say, well, it's that one with that serial number, so there's your physical delivery, but you can't get it unless you have like $1 million in liquidity, and you have special permission, and you're connected to a bullion bank or whatever it is. It's possible. It's just not for retailers. So the physical delivery has to do with warrants being exchanged. It doesn't have to do with gold leaving any of the vaults. But that could happen. I mean, deliveries could correlate with the supply going up or down. It just doesn't have to. So right now, what I've seen is that the gold supplies, meaning the amount of bars that are in either eligible or registered, they hit a high mark. I think it was like 42 million ounces maybe 43, something like that. I could be off by a few million, but the point is, wherever it is, it's been edging down slightly now. So either they're being pulled out of the vaults or they're going back to the UK or to Switzerland. I don't know. The thing is, I'm not looking at that directly right now. I was curious because I wanted to see how high they would go, and I think it has to do with tariffs, because in the atmosphere of uncertainty, nobody knew for sure if gold bullion was going to be tariffed. So if the bullion banks were going to be forced to close their short positions through delivery, like they had a risk, right? If the price is going to go up and they couldn't satisfy it through delivery without paying like a 25% tariff or whatever, then they'd be screwed, basically, because they wouldn't be able to save their dollar positions through delivery. So they had it front loaded and just brought to New York beforehand. But now that bullion isn't going to be tariffed anyway, it doesn't really matter. So it'll probably head back from here. If they can get reassurance from the Trump administration that he's not going to mess with bullion. Which I don't know. I don't know if you can count anything as reassurance from the Trump administration.
I was going to say, what do you count reassurance from the Trump administration when it seems that the negotiating tactic of uncertainty and somewhat borderline chaos is one of the methods of operandi?
I don't know. What about it? It kind of hurts me it doesn't hurt me. I just wanted to add that, like, I don't really know how to approach them, because it's tough to criticize the Trump administration knowing what the alternative could have been, which would have been horrific. This at least is like entertaining in its uncertainty, and there's some kind of hope attached to it, but like it's all just a clown show, and you don't really know what else to say.
We interview constitutional attorney Dr. Edwin Vieira, and his quote prior to the election was that a Kamala Harris president would have been a catastrophe. A Trump presidency would be a calamity. So it's an interesting way of looking at it. There certainly is a lot of uncertainty, and it can breed chaos, and that a lot of positioning, a lot of spreading of volatility, because people basically spreading their metaphorical feet farther apart to try to be able to react on depending which way the things are going to whipsaw. Now, you're describing how this could perhaps slow or even reverse some of the physical shifting of metals from London to New York and off the exchanges. What about the sustained demand, basically we were told, from central banks, Russia, China, and India, among others, over the last couple of quarters, especially, not to mention the last few years, but accelerating in the last year, of central bank buying of physical gold and repatriating of that. What do you see now happening, and what do you believe about that trend continuing?
So it's actually pretty funny that you're asking me this question, because right before I signed into this interview on Riverside, I was uploading a video. I haven't published it yet, but I just finished. And then when it finished, I signed in here, and I talk about the central bank holdings of gold from different countries. I looked at Trading Economics. They have a good setup. And now, speaking of inflation, now they're charging for memberships some kind of nominal fee, but still I had to pay them, and I never did before. So now I pay them. Okay. And I looked at their list of countries, the top 15, 20 bullion holding by central bank, and China was in there. And the only ones that I saw that are buying gold right now, of course, I don't know. The data is only good through Q4 of 2024. So it doesn't account for the rally from February to now. So anything could happen. Nobody has that information yet. And when we have it, it'll be incomplete. But what I've seen is that the two central banks that are buying the most are actually Poland and India. So India has been buying consistently, and Poland as well. Now, Turkey has also, they've been up and down. I think they're at a new high in their gold holdings, but they buy and they sell every month depending on what their currency does or how desperate they are. So I don't really rely on them. But China isn't buying much or hasn't bought much through Q4 2024. Russia hasn't bought any significant since 2020, or at least not that they're telling us. And Japan bought a bunch in 2021, but hasn't done anything lately. So there isn't that much going on, at least up to Q4 2024, except for Poland and India. And I think India has been more aggressive. Now, I don't know enough about the gold market dynamics to tell you if the buying between Poland and India is enough to push the price higher. I would suspect not, because they're also sellers. For example, Kazakhstan, which also showed up in the list, they were strong buyers up from, I think, like 2018 to 2022. Then they maxed out, and they've been selling ever since. Not like huge amounts, but enough to cancel out some of the demand from Poland and India. So we're going to have to see what the numbers are for Q1 2025. And it could show some significant buyers there, some central banks getting nervous on the Trump tariffs. Who knows? I don't think that. I just want to clarify that I don't think that central bank buying of gold is really that important, and I don't mean that I don't mean that it's not going to drive the price. It will, but in the end, any central bank that has gold, it's not going to be enough. It's not going to save their currencies, because they don't see gold as money. They see it as an asset through which they can manipulate the value of their currencies, which are the money. That's how they see it. In order for gold to be money for a central bank, they'd have to stockpile it and then stop printing and then let their banking systems all collapse, and none of them are willing to do that. So it's all a game for them, and it doesn't really matter how much they have. Eventually, in the end game, it'll all go into our hands, hopefully, and the central banks won't have any, because they'll be busy selling it to try to save their currencies and then fail. That's how that would be the best for us. It would be very traumatic for users of currencies, but that would be the best outcome.
You may be more optimistic than many about the role of the outcomes, how they're going to affect the big players versus the small players in the end game. Is there any particular reasons or historical precedent that you can point to that would help people understand your reason for optimism of the small individual retail investor, et cetera, rather than the big central banks in the end game?
Well, instead of history, let's look at culture and just general patterns in history, and villain/hero tales in books, how they're portrayed. It's usually the whole David and Goliath metaphor. The Goliath was also used, I think, by Brett Weinstein, who I listen to a lot, to describe the interplay of the deep state versus the common man, and the fact that a few people on podcasts were able to call out the big networks, and how the big networks can't really portray any news anymore that isn't just propaganda. So we see the sclerotic nature of the big, huge Goliaths, and how they can't really move, and they're at a severe disadvantage. They are the recipients of inflation. So they get bigger and bigger as the money supply inflates, because it goes to them. And but even so, when inflation is at its maximum, it always gets worse until it all falls. And now that it's at its maximum, we see that they're getting even less flexible and less of an ability to move around and survive and make any sense. So we're already seeing, I mean, from what I experienced and what we all experienced in 2020, 2021, 2025 is a breeze. I mean, for us, if you've been stacking gold since then, and you understand inflation, you understand that in the end you can protect yourself by just understanding what inflation is and getting the anti-inflation assets, which is money itself, which is gold and silver. You will do fine as long as you keep your head together. And that's what's been happening. I mean, I've been having a pretty good year. I'm not talking about financially. I don't really do anything with my stacks or anything. It's like they represent a certain amount, and now they represent a different amount, but it doesn't really change my lifestyle. But I've been feeling a lot more optimistic, just about the human spirit lately. Just like an alcoholic would feel optimistic when he finally admits that he has a problem, and now he's like, okay, we have a problem. Now let's try to deal with it. So people are realizing that we have a problem, and that's a great thing. And yeah, there's a lot of work to do and a lot of people are going to suffer, but suffering isn't such a bad thing when you know you need to get through it. Like, again, the alcoholic, when he knows that he's got a lot of tough times ahead of him, maybe some delirium tremens or whatever it is. Maybe he's got to, be at a hospital for that, but he's pained in a certain way, but he's not like dreading it because he knows on the other side, it's much better. That's how it always is. The big evil players cannot survive because they rely on theft to continue. And once the theft ends, they stop winning.
May I add to that? They rely not only on theft, but on dishonesty, on lying. So what I'm hearing you say is that generally when you switch to a life based on deception to a life based on truth, then you've suddenly closed that gap, and now reality is wedded to what your approach is, what you're acknowledging, and things go a lot better for people who are living in the truth than people who are living a lie, or organizations. Am I following you?
Yeah, you could say it that way.
Along those lines, you've talked to us in the past about that when we have dishonest money, and I mean, we'll call it dishonest money, which would really maybe be better to say fiat currency, that you end up with dishonesty becoming prevalent in all aspects of society. You used to say that you inflate your money, you inflate everything, because it has to do with that debasement, that divorcing and that separation, that schism between reality and truth on the one hand versus what's being accepted and passed off as something that's legitimate on the other hand. We're seeing that in a lot of the price increases due to price inflation that is being hidden and swept under the rug. And when you hear on news discussions about it, or articles about it, or interviews with people about how high prices are impacting their life and everything, it's real. I mean, this is real. People are struggling, but the finger pointing usually goes to the end leaf nodes of the symptoms showing up, such as, well, now look at the shrinkflation packaging. I used to get 2 quarts of this, now I only get 1.5 quarts, but it's still passing it off as the same thing. Or I used to be able to get into this place with free parking, and now you have to pay for parking. They're adding all these fees at the bank and et cetera. Just all this adding on of ways of diverting and disguising and hiding the truth about the impacts of debasement of the currency, rather than saying, look, since the abandonment of the gold standard and the formation of the Fed and these sort of things, this is where the root of the tree is, and it's evil because it steals working people's wages and earning and savings and retirements, etc. What do you see in our world that, and I believe this is tied to what you were just saying about truth and reality, at least if you're going through recovery or rehab or whatever, at least you've acknowledged you've got a problem. Can you draw that for us and maybe help give some more examples, if it's necessary, of where debasement of the currency or debasement of the money causes basically dishonesty and debasement of society?
Okay, I've got a good one for you, because I've been discussing this with my wife for the last few weeks. And, okay, so there was this phenomenon, or this article in a mainstream Israeli newspaper, about how the current generation, like the equivalent of the boomers in America, they're just deciding to spend whatever savings they have because lo magia lahem, the saying goes, like the new generation doesn't deserve their money, and they don't want to just give it to them so they can piss it away, so they're just spending all of it, right? And then I said to my wife, this is inflation. They might not be acknowledging this, but the value of their currency is falling, and they just see it as futile to give it to their kids or their grandkids, and so they're just spending it. But that's what hyperinflation really is. It's just everyone not saving even for the next 5 seconds. That's the ultra extreme of it. But this is a symptom of that. But it's not just that, oh, well, the value of the money is falling and therefore we're just going to spend it, and our kids, they can go screw themselves, or not that extreme, but they can fend for themselves, and they probably rationalize it, like, let them do the hard work that we did. I don't want to spoil them or whatever. You can give all these kinds of reasons, positive or negative, but really you're supposed to save for the next generation. We all know that. That's normal. But when did this process really start of the separation of generations, where the older generation no longer really cares for the younger generation? And that's when the inflation process started and got worse, because if a father cannot support his family on one salary or one honest job, then what happens is the woman has to work too, and then there's nobody at home for the baby, and then they have to send the baby to daycare where people that don't really care for it, I'm not saying they abuse the kid or anything like that, or anything untoward happens, but if a baby from let's say 6 months until you stop getting maternity leave, or 3 months even, until it's like 2, is seeing mostly strangers and alcoholic smells of wipes and these like artificial smells, and doesn't recognize the smell of its mother, they're going to grow up less attached to their parents. That's just what's going to happen. I mean, we are animals. We are apes. We attach to our parents on these visceral smells, just like all other animals do. We don't realize it because we're more, super ego creatures than they are, but it affects us. And so that starts the ripping apart of the family, and the children not responding to parents, and not taking their parents seriously, and parents not knowing how to talk to their kids. Well, what do you think is going to happen if you've been away from them most of the day, and you only see them at 6 o'clock at night for dinner at most, for a few hours a day, and then you're off to work again and nobody's at home? Like, this is how they rip families apart from the foundations. And then at the end of the process, you have the older generation saying to the younger generation, go fend for yourself. I don't care. This is how it happens. So it rips apart the fabric of the family. Now, if you are attached to sound money and truth, I see the exact opposite in my family, because my kids, they want to help her out in the house, or they do something for me that I wasn't expecting. I say, oh, great, here's a dime. And I give them a silver dime, and they're really happy for it. And they each have their box, in the safe, in the attic, where they keep their little silver stashes, and they take our advice seriously. To expand a little bit further, my wife was talking about how attached she was to her grandmother, because she cared for her when she was a little kid. When she was a baby, her grandmother was her babysitter, and so she became very attached to her grandmother, and her grandmother became very attached to her, and that that leads to stronger families. But now the grandparents don't want to deal with it because they're tired. Why? Because they spent all their time working at home, working and not taking care of their kids. So they're not used to hanging out with small children. They don't have the energy for it anymore. And then you rip those generations apart. It's a subtle thing, and it keeps getting worse. But if you return to sound money, you can keep your family together and make them stronger as the rest of society tears apart. But even it can only go so far until the whole system stops, and then families have no choice but to care for each other because things are desperate. And then that repairs a lot of the damage. It doesn't repair all of it, but it repairs enough that you can start the next generation on a better footing than these generations were.
Is it fair to say that what you're describing is a loss of hope in the future? The Mises crack up boom, as people have given up faith and confidence in the currency, if they want to just dump it quick for something real, shifting their ownership from something that's not real and fading fast to something that's going to sustain some value, or maybe give them some immediate pleasure. And you buy anything other than holding on to a failing currency. Is what you're describing then the psychological playing out of that? Is you're really giving up hope in the future, where you used to have the idea of building a nest egg, working hard, earning savings, and building a future for yourself and your family. Now the system's rigged against us. They're not going to have a financial future. Might as well just live off of what we can, and they'll have to figure out how to make it on their own. Is that part of it, this loss of hope in the future?
Yeah, that is. But again, what you were talking about before, and how I'm more optimistic than most people in this space. I'm not claiming that I am. I'm just saying that that's what people say about me. The whole process of losing hope leads you to the hyperinflationary crack up boom, which is I need to preserve whatever purchasing power I have left by buying whatever is real, and it attaches you to anything that's real through that loss of hope. again, it leads us back into a circle where we have to start over again from a level now that the inflation is cleared out. Now we can rebuild again. So we feel empty, but like, okay, well, now it's over. Well, now what do we do? And we can start over from there. Not easily, but with no alternative because there's no more money to finance evil. So then you're kind of forced into the path of good, even if you might not even want to be there. Like, you have to work now. Okay, we're going back there. Everybody is. The people that profited from inflation, the people that didn't profit from inflation, because the only difference is the people that didn't profit from inflation and that were wise enough to stack, we're going to be on the other side of that equation, because society is going to be a mess, and we're going to be like, okay, I have all this capital now. What am I supposed to do with it? And, we're not going to be capitalists. We're not going to be very skilled in that, but we're going to have it because we stacked, and the prices of capital are going to fall to tiny fractions of what they were in real money terms. And then all of a sudden we're going to be capitalists, and we're not going to know what to do. And then we're going to figure it out. Just like during the COVID times, we had to be truth tellers and podcasters and try to get the truth out because the medical establishment was failing and this establishment was failing. And all of a sudden we have to speak out about things that we're not really experts in because we see lies everywhere. But okay, we did it. It took us a few years to get it through, but we did it, and now we're in a different era. So I'm waiting for the era where the stackers that are not capitalists are forced to become capitalists and see what we can really do with the situation. It's going to be fun. It's going to be terrifying, and it's going to be a big personal growth for all of us. And some of us will succeed more than others, but I think we'll be fine.
David and Goliath's story is very popular in one of the epic myths. It shows up itself a lot of places. Sometimes it can be really hard on the little one in facing the big threat. So it's going to be interesting. I'd like to talk with you more about that and how you see that playing out in the end game. If people want to follow your work on an ongoing basis, you have a Substack. Where should they get connected?
Check out my Substack, endgameinvestor.substack.com. My YouTube channel is Rafi Farber, my name. And I have also a Patreon, which is patreon.com/endgameinvestor, where I give a more religious angle on these topics with my traditional sources. And what else? I think that's all I do. I probably missed one or two things, but I have a Twitter. I have a Twitter handle if you're interested in that. That's more of my thoughts. A little bit more controversial stuff, but I think that's enough.
Your Twitter handle is?
Rafi Farber.
All right. Rafi Farber, founder of the Endgame Investor. Thank you for joining us again on Liberty and Finance.
Thanks, Dunnigan.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 22nd through April 29th, 2025, while supplies last. First this week, we feature 1-ounce silver Canadian maples at their lowest premium in years at just $3.49 over spot. Next, 1-ounce Gold Philharmonics are only $65 over spot. 1 10th-ounce Platinum Britannia are just $29 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.